Good evening, everybody. This is the first time I'm streaming on Vimeo, so I'm quickly going to do a little check if everything is working. There's a little delay, so I'm gonna wait a few seconds. Please let me know in the chat if everything is working as it should. If you can hear me all right, if you can see my screen. All right. The first replies are coming in. All right, great, great, great. Nice. Okay, so then that's all working then. All right. So let's move on to tonight's contenders live stream. I reckon it is quite a interesting moment because Bitcoin is doing its thing. It's reaching key levels, and as you all know, swing failure patterns are kind of a very important subject, especially in these kind of scenarios. So I would say if you're not in a trade, or leave the charts alone, because what I'm about to go over in the coming, let's say, 40 minutes or so, will be so much more valuable than right now trying to take this specific trade off of the weekly that we're currently at. So, because I think this information that I'm gonna give you will be reapplicable to many other situations, and this is potentially just one of those situations. So if you're here to learn that, I would say move the trading part, like close your chart, close your trading portal, so to speak, and give your full attention to this stream, as we are going to talk about swing failure patterns tonight. So first of all, I have to show you this disclaimer. If you haven't read it before, then pause and read the screen and read it through. If you've already done so, then into Vimeo. The original stream that we did on swing failure patterns after this stream, will be removed from YouTube and replaced with this one. I also do feel it's really good to do a new stream on this subject, as questions about swing failure patterns and reactions is by far, till the day of today, the subject that we get most asked about of all questions that come up. So with the topic of swing failure patterns remaining really relevant, and also with a lot of new members joining, we felt it was good to simply just do another stream on the subject. And on top of that, also the dynamics in the market have changed over time. So therefore, the whole concept, for those who are already familiar with swing failure patterns, remains the same, but the way that I trade them are a little bit more refined, I would say, and I would be happy to share this with you tonight. So what we'll be working towards in the end of the stream, you will be much more familiar, if you are not familiar with the concept yet, as to what swing failure patterns really are, but also how are they ignited, how do they come in existence in the first place, why are they even there? And then also I'm going to present you with two strategies that you can use to trade them. And of course, they all will be accompanied by examples. So having that said, let's begin then. I'm pretty excited about this one, to be honest. So let's continue then. To start off, what I would really like to start off with is, in order to really understand what a swing failure pattern is, you first have to know what is the meaning of liquidity and how to recognize so-called liquidity zones or liquidity pools. I'm gonna start off with a question. in a second. So recognize in order to really understand, to be honest. So let's continue then. To start off, what I would really like to start off with is in order to really understand what a swing failure pattern is, you first have to know what is the meaning of liquidity and how to recognize so-called liquidity zones or liquidity pools. I'm gonna start off with a question in a second. So listen carefully. Imagine you're trading with $50 million and we are currently trading in a low volume range. There are two options to get into a trade. You can choose to enter into a trade by limit order or with a market order. Now, if you have watched some of the previous live streams, then you are aware that market orders are the orders that actually move price, whereas limit orders don't. In other words, market orders take liquidity out of the market, where limit orders actually provide this liquidity. Now, if you're trading with such size, it can actually cause issues. If, let's say, the average volume in that specific range that you're looking to trade within is about 3 million volume on average within that range, and you decide to enter into a trade, it can be a long or a short, doesn't matter. You decide to enter in that range with a limit order. The volume is obviously very low. So ask yourself, how likely is it that your order is going to get fully filled before it actually moves in the direction that you trading for? On the other hand, if you enter with that size with a market order, 50 million in an average 3 million volume range, if you enter that amount at market, you will essentially slit your own throat, so to speak, as your entry will probably be all over the place because there's simply not enough liquidity to fill your order. So that gives the bigger trader liquidity problems. And so that makes it so that it's not so easy to enter into your desired position. Now let's take this a little step further. What if you would be able to actually find a place where a lot of market orders are sitting? If you know that market orders are moving the price and limit orders are not, then it makes total sense to find a place where people trade a lot of market orders, because simply that would be a good place where you can hold up the price as your limit order gets filled. In other words, if you can actually find a place where lots of transactions take place, if price reaches there, it would give you a perfect opportunity to easily get into position without any problems. Now here's the question. Let's hold that thought for a second, and I'm gonna give you guys about 10 seconds or so to think about where would the largest amount of transactions take place. So visualize for yourself this range, and we're trading in the middle, and we are in an uptrend. Now, what would be the place where the largest amount of transactions take place? I'm gonna take a sip of a drink in a second, in the meantime. So now that you have probably given it a little bit of thought, the correct answer is stop losses. Most people have their stop losses set as a market order, so naturally that is the place where you can actually grab this liquidity and get your position filled. These are great places because the point is people feel very safe to place their stop losses on a place that is also backed up by technical analysis or the structure of the price, so to speak. Usually this is below a significant high or low point in price. Now let's look at a little example of this. Let's look at this uptrend price. So places, because the point is people size for yourself this range, and we're trading in trade a lot of market orders, because simply that would be a good place where you can hold up the price as your limit order gets filled. In other words, if you can actually find a place where a lot of transactions take place, if price reaches there, it would give you a perfect opportunity to easily get into position without any problems. Now here's the question. Let's hold that thought for a second, and I'm gonna give you guys about 10 seconds or so to think about where would the largest amount of transactions take place. So visualize for yourself this range, and we're trading in the middle, and we are in an uptrend. Now, what would be the place where the largest amount of transactions take place? I'm gonna take a sip of a drink in a second, in the meantime. So now that you have probably given it a little bit of thought, the correct answer is stop losses. Most people have their stop losses set as a market order, so naturally that is the place where you can actually grab this liquidity and get your position filled. These are great places because the point is people feel very safe to place their stop losses on a place that is also backed up by technical analysis or the structure of the price, so to speak. Usually this is below a significant high or low point in price. Now let's look at a little example of this. Let's look at this uptrend. This is taken from a few days ago, from a few days ago. And here you can see that we have bullish market structure with two consolidation area. One that is downward sloping or sideways, depending on how you look at it, and one that is more upward sloping. Whenever price consolidates, it is basically an area where everybody is figuring out where price should go next. That's the whole point of price consolidating. It's kind of like a decision-making area. People are not necessarily very bullish. People are not necessarily very bearish, and they're working out where price should go next. In this case, it's obviously up. So naturally, whenever price returns to one of these areas, you can ask yourself, and here we. So now that you have probably given it a little bit of thought, the correct answer is stop losses. Most people have their stop losses set as a market order, so naturally that is the place where you can actually grab this liquidity and get your position filled. These are great places because the point is people feel very safe to place their stop losses on a place that is also backed up by technical analysis or the structure of the price, so to speak. Usually this is below a significant high or low point in price. Now let's look at a little example of this. Let's look at this uptrend. This is taken from a few days ago, from a few days ago. And here you can see that we have bullish market structure with two consolidation area. One that is downward sloping or sideways, depending on how you look at it, and one that is more upward sloping. whenever price consolidates, it is basically an area where everybody is figuring out where price should go next. That's the whole point of price consolidating. It's kind of like a decision making area. People are not necessarily very bullish. People are not necessarily very bearish, and they're working out where price should go next. In this case, it's obviously up. So naturally, whenever price returns to one of these areas, you can ask yourself, wait a second, if everybody just agreed on the fact that price should go higher, how come we're getting back into this decision making area? Didn't we already decide? If you then start to lose that area, then clearly that whole consensus that has been gained as price moves up is definitely short-lived, because it means that we're losing the decision-making area, and the decision people now agree that price should go lower. So this is why consolidation areas provide very good support or resistance areas, and of course that depends on the direction of the trend, whether that's support or resistance. In an uptrend, they offer support, and obviously in a downtrend, they offer resistance. So therefore, it makes a lot of sense, and it is also not wrong, to place your stop loss just below this consolidation area, for example. Now, obviously, a lot of people know this, especially bigger traders. So that is naturally where a lot of stop losses are, and naturally, those are good places to get bigger orders filled. And that brings us to the concept of swing failure patterns. So swing failure patterns are essentially attempts to swing below a significant low or a high, but actually failing to do so, and instead closing back above the previous low to resume or reverse a trend, or giving an opportunity to trade a bounce. So there's multiple ways what you can look for. Swing failure patterns are also called stop hunts, or in other words, liquidity grabs. And this is really the reason how bigger traders are able to actually fill their positions without posing much problems. Naturally, you want to trade with the big traders rather than against them. So these are really great places to actually look for a trend, significant low or a high, but actually failing to do so, and instead closing back above the previous low to resume or reverse a trend. Makes a lot of sense to resume or essentially attempts to swing below a significant low or a high, but actually failing to do so, and instead closing back above the previous low to resume or reverse a trend, or giving an opportunity to trade a bounce. So there's multiple ways what you can look for. Swing failure patterns are also called stop hunts, or in other words, liquidity grabs. And this is really the reason how bigger traders are able to actually fill their positions without posing much problems. Naturally, you want to trade with the big traders rather than against them. So these are really great places to actually look for a trade, if you know what to look for, because breaching a low doesn't necessarily mean it's going to be a swing failure pattern. Having that said, swing failure patterns do occur on all time frames. Although the higher the time frame and the more significant the key level is, it is more likely that the effect is going to be bigger. So ultimately, context is just super important. Not every swing failure pattern reverses a trend entirely, for example. If you're looking for a swing failure pattern on a 5-minute time frame, sometimes it does reverse an entire trend. But in terms of if you're trading throughout the day, these swing failure patterns occur time and time and time and time again. And they do not necessarily always reverse a trend entirely. But they do give you nice day and scalp trades. Having that said, you should also always find confluences from other technical analysis. Swing failure patterns can either trade into a short-term retracement or a complete reversal. So those are typically the two ways that swing failure patterns play out. So at first, maybe it swing failures something, then it actually initiates a retracement, but then it maintains the current market structure. And then in terms of if you imagine a bullish trend, you have a high and then a little bit of a range, then it swing failures that, then it retraces into a higher low only to continue the trend. That is one way how swing failure patterns more recently tend to play out. But in other scenarios, it literally reverses an entire trend. It can also be a macro trend. So how does a swing failure pattern really look like? Let's look at an example. And because I really love altcoins, I've picked an altcoin as the first example. This is Icon from about a year ago. So this is rather an old chart, but I think this is a really great example. Because here you can see this was the low point in price. Then we got a bounce over there, which came off of the CC. So that was a confluence amongst other levels. But for clarity's sake, I've removed all of that. So you can read it better. So essentially the CC, there was technical confluence. We bounced off of that. And then we actually took out that previous low, but we closed back above that. And that ultimately ended up in a massive uptrend. So in this case, it was a trend reversal. So this is how a swing failure pattern looks like in TradingView, for example. You here have a low, then you basically wick through that low, and then the candle closes back above this previous low, and then price simply moves upwards only to never return to that level. So this is how it visually looks like. Let's look at another example. This is Bitcoin in March, exactly 1 year ago. Wow, yeah, that's coincidence, by the way. But there are multiple swing failure patterns here happening on this chart that resulted in a major move. The biggest one was here at the top, and I see unfortunately is being cut off. But this was the literally the high of the entire move before we had the Corona situation going on. Although this was the Corona situation, and here it was not really an issue just yet. But the chart said. The chart at that time was already giving bearish signs. So in that sense, this large drop that ultimately happened was in the charts already, and in my opinion, not based on news. So let's begin with the top. I feel a little bit bad that I cut it off. But basically what happened over here is here was a high, then you had a little drop. So actually you had a swing failure pattern at first. You had a retracement. Then you had a swing failure pattern of that particular high, and that is really signaled the end of the trend. You basically closed all the way back down here. You ranged on for a little while, and you dropped, swing failuring all these lows over here. You bounced, you ranged, you swing failured this high. You had a drop in price. You swing failured this high. Then you had a bounce again. You ranged here for a little bit. This didn't swing failure at the point, but then you had the drop, which actually gave you the initial change, high term time frame change in market structure. So from this point on, At least I was looking to short. So what happened over there? Another swing failure pattern over here, which gave us a bounce into the CC. If you pull it from here to here, that was the CC. Then we kind of ranged on for a few days, only to swing failure again, and that is really when the big drop started. So you can see how often these swing failure patterns happen a lot of the times. Now, having that said, when BitMEX was still a thing, they happened much more often and on a larger scale. Now they also still happen a lot, although they don't really, signal a total trend reversal so much anymore. They do happen, but they're more rare. So just to illustrate how often swing failure patterns happen, and maybe also that helps you with dealing with maybe the current situation. At the moment, I don't really know what Bitcoin is doing because I'm giving the stream. But just before the stream, I was looking at a potential swing failure pattern. That would be really great if that was actually happening. But this also signals the fact that they're gonna happen time and time and time again. So if you miss one, no problem. There's gonna be one tomorrow. There's gonna be one next week. There's gonna be one next year. So don't FOMO into it, in my opinion. With this in mind, they can actually be a really, really great opportunity to let a scalp trade turn into a swing trade. Another example that I have, so how do you do that then? I have an example of a trade that I took myself. This is taken from the BitMEX chart. On the Bybit chart, we did not have this swing failure pattern, but it, by looking at this chart, it did help me get into a trade. So this was a few days ago, and there was an increase in price over here, and we started ranging here at the top, which was also a resistance level. And we tried to trade, at least on BitMEX, above the range. And then ultimately, you can see that it took out this high, but it closed back here inside of this range. This gives you an entry. So that is how you can trade it. So this gives you an entry with a very easy invalidation, because if price now reaches back above this level, then it's simply not a swing failure pattern anymore. And thus, your trading ideas immediately invalidated. Then, as you are simply still at that point still ranging, a sensible take profit level would be the low of the range. Or if the range is a little bit bigger, you can also decide to take profit at the point of control of that range. And then if you actually start losing that range, you can either compound your trade or leave it running. And if you traded this as a swing failure pattern, then ultimately it would have given you a really, really, really amazing trade. It would have given you 4% as opposed to less than a percent stop loss, which is really great trade. Now, this so-called swing trade did play out over the course of a few hours. But I do find this example very clear and precise as to how you can actually let something that starts as a scalp trade, simply trading a swing failure pattern and then continue trading the range, and then when it drops, it actually turns into a different style. I would say different type of different category of trade. So, having that said, how do you trade a swing failure pattern as a beginner? The first thing that you want to wait for is for the price to take the high. And of course, if we're in a downtrend, you want to see this as you want it to take the low. Secondly, you're waiting for a candle close below the previous high and back within the local range. So very similar to this example. Secondly, you're waiting for a candle close below the previous high and back within the local range. So very similar to this example, right? So you simply wait for price to take the high. You don't trade this just yet, but you simply wait until the candle closes at the very least below the previous swing. And then you take profit at the bottom of the range, and then you can choose either to compound or let the trade run as you change market structure, local market structure in that sense. So this example is a bearish swing failure pattern, and naturally this is all in reverse if you are trading a bullish swing failure pattern. So this is what I would class as trading swing failure patterns. If you're, let's say, not familiar with ExoChart, for example, like that, so this is how you can visually trade a swing failure pattern from, and you can do this successfully. Now, there's a second way to trade a swing failure pattern, and this method is where we add in more complexity by looking at things like ExoCharts, and is a more advanced way of trading and more focused on trading the immediate price action, because ultimately that is what swing failure patterns are. They are, you trade them based off what's happening there at the exact moment. So the first thing that you want to look at is you want to look for trapped traders that are trapped in their position. Now, what do I mean with that? How does that look like? It looks as follows. So I think this is a really great example. What you want to see is you want to see very high activity at the lows. And in ExoCharts, you can see this by all these red little squares, so to speak, which are called selling imbalances. Ideally, you want to see the point of the control of this particular candle also at the lows, which signals that the highest amount of transactions have taken place at the very low. Additionally, what you also wanna look for is open interest. You wanna typically it's always gonna be a mixture between longs getting stopped out, and ideally you also want to see new shorts opening up there at these lows. So you wanna see these stops getting hit, longs getting out of their position, and then in turn you also want to see people turning very bearish, and then shorting actually the breakout to the downside, so to speak. Only for them, as soon as price moves up again, then you don't have the longs in a position anymore. The trade is going in the direction that they originally wanted it, but now they're out of the trade, so they need to re-enter at some point higher up again. At the same time, everybody who shorted over here now is in a losing position, and this is, I would say, the perfect mixture what you're looking for. But this is only the first ingredient that you need if you're looking at a swing failure patterns. This is not necessarily a trading entry just yet. So typically that's what you want to see. Another thing that you also can, in this particular example, what you can see is compare the volume and the delta to each other. So here we had a drop in price. Here we had a decrease in open interest. And we had 86 million volume in that candle, of which 57 of that was negative. Now, on the second attempt of retaking that low again, you can see that it's happening on lower volume than on this attempt, and also the delta is less negative. So that also indicates that's like an extra confluence to show that selling is not as aggressive as it was in this low. So all these factors are now starting to make sense, hopefully, and that is the beginning of how a swing failure pattern can potentially play out. So that is the first step. The second step that you need to look for is, next you want to see demand to show up. What do I mean with that? I basically mean, instead of first you look for all these red little boxes, so to speak, selling imbalances, and then you want to see people buying that with market buys, and those translate into the green boxes. And again, you can see that also if the delta becomes positive and if the volume increases, etc., that shows demand. You also want to see an increase in open interest. In other words, you want to see new longs opening. You want to make sure that when you do see these buying imbalances, they don't necessarily always represent new longs opening. They can also be shorts getting stopped out instead. So you want to make sure that you also pay attention to the open interest, as you want to see new longs opening up over here. And that effectively traps all these traders, because now everybody who sold here is now being trapped by people who are literally longing here at the low, and obviously they're gonna defend this level because they don't want to lose their trade either. And then of course higher up there's always gonna be also a mixture of shorts getting stopped out and new longs, for example, FOMOing in, and then you have the potential of a swing failure pattern to the other side of the coin. So it's kind of like a circle. It happens all the time. The third one, I also had this one. This is a really clear example that show that buying imbalances. There's a lot of buying imbalances coming in here, and you can clearly see this is an image where I subdivided not only the open interest, but you can see the longs versus the shorts, and you can clearly see that at this point longs are actually opening and shorts are closing at the same time, and that is what generates all these buying imbalances. So you can clearly see that it's a mixture of two different things. So you see new longs opening, and you see shorts getting squeezed out of their positions as well, which ultimately fuels the rise even further. Because if you think about it, then if you are in a short and or let's say if you're in a long and you get stopped out at first, and then you see price moving up into your preferred direction, what do? You want to get back in, right? And that is the moment when people are FOMOing in essentially, or market buying in order to also participate in the move. And as I said in the beginning, it is these market orders that actually move the price. So the more people get stopped out, and then if initial demand, so you always have a couple of first buyers and then the rest joins in. If that happens, then it literally provides so much fuel for a further rise in price, and that is why swing failure patterns are one of the, I would say, most powerful price action patterns. I suppose you can class it like that. That's out there. So, step 1, look for trapped traders. Step 2, look for demand to show up. And then the last step, look for a change in market structure. And this is really, really important. And I'll get back to that in a second. This is market structure. So this is basically the situation that I was just showing in extra charts. So this is actually what happened over here, which was at the lows a few days ago. This is on an hourly time frame. Ultimately, we swing failure these lows, and we started to make a high, a higher low, and a higher high, essentially confirming bullish market structure on the 1 hour time frame. This is the same situation, but then taken on the 5-minute time frame. Here you have your low, your swing failure pattern of this low, as you can see. You make your way up, you make your way down, you do not lose this low again, and then you actually break this initial high, or a combination of the high and actually a range or ascending triangle, I suppose how you can call it, into a new higher high, which actually gives you confirmation of market structure. And you can see that even then there's plenty of time to actually enter into the trade. So there's no need to enter all the way at the lows. And that's especially if you're still practicing on how to trade swing failure patterns. I would say the lower the time frame you're actually looking for this change in market structure, the more risky your trade is, because a change of 5-minute market structure doesn't necessarily mean that the whole trend is gonna reverse. Overall, at this point, you're still in an hourly downtrend. The hourly, you can see this is still the yellow line. So the hourly market structure changed a lot later. So keep that in mind. So, just as a summary, how do you trade the advanced way of trading a swing failure pattern? Step 1, look for traders to be trapped. Second, look for demand to show up. And 3, change in market structure. I think that is almost everything that I would like to say. The last thing that I want to say about this is the fact that in reality this can actually be hard to trade, especially if you're still learning how to trade swing failure patterns. If you do it more often, then it kind of becomes second nature. But I do want to mention very clearly, don't ever try to catch the knife. If you see a lot of shorts opening at support, right, without the 2 other ingredients, this is actually bearish price action, because people are actually opening up shorts. So, until they are actually being trapped by, for example, step 2, showing that there's actually demand now, that they are effectively trapped. If you don't have that confirmation, the second confirmation of demand showing up, then it's essentially simply bearish price action. So if you're literally entering into longs as you see shorts opening up, that's not really the best way to do it, in my opinion, because price might as well simply continue to drop in that sense. You really need to wait for this initial confirmation, at the very least step 2, and then ideally step 3 for a change in market structure. And that is, I would say, the best entry with that gives you the best probabilities. And also, if you have this change in market structure, you have a very clear invalidation area. You have an extremely clear invalidation area, simply stop loss below the low of that swing failure pattern. Why is that a good place? Well, liquidity just has been taken. So if it comes down back again, there's not more liquidity to grab over there. most likely. And if so, then it will probably go to the next liquidity pool. And sometimes that can be, 5 or 6% away. So you simply then want to be out of the trade. And that's why I think, in that sense, stop loss directly below the low after your entry is very, very legitimate way of placing your stop loss. If you respect less than these 3 rules, then the trade can be classed. Of course, you can trade it, but do keep in mind that the trade that you're then taking can be classed as extremely risky, and that's a very aggressive way of trading. So if you decide to, let's say, do that, then always keep in mind, keep that in mind, that your trade is at that point really risky. So keep your position size in mind. For example, don't go all in on the first sign of trap traders, for example. It is valid, I would say, if you look for step 1 first, then you see demand showing up, then you could potentially enter a starting position, and then you can compound or add more as you actually see the change in market structure. Yeah, that's about it. What I wanted to, what I really wanted to cover, and I think I've managed to do this in a little bit more of a compact way than the previous one. So I think that's really good. I think it's more focused. Actually, now that we have a little bit of time extra, I kind of wanna see what's happening on Bitcoin. So let's take a look at Bitcoin, shall we? If we actually swing failure that high. For that, I need to quickly change my screen. There we go. So, what is happening here at the moment? Let's go over the chart for a second, over what's happening here. So, I think you could class this more or less as a little swing failure pattern. Let's analyze it a bit, shall we? So, what happened over here? Obviously, we are in overall in bullish market structure, and so based off of here, even from here, you can say you have here your high, a little consolidation area, higher high, little consolidation area, higher high, into the weekly resistance level. First hit, little rejection. Second hit, swing failure pattern. And it would be really amazing if it's actually going to play out live on stream, because that would obviously be the best example. So let's take a look at what's happening over here. At the moment, you could class this as a swing failure pattern of this high. So let's take a look at what happened over here, right? Let's keep in mind these 3 steps of the 3 steps that you're looking for. At the moment, market structure is bullish, so that's against us. At the same time, we know that there's resistance at the moment. We swing filled this high as we literally took out the high and then closed below this high. So this is how it looks on TradingView. Now let's move over to Exo charts and actually let's see what has happened over here. You can already see that there's a lot of point of controls here at these top of these candles, right? And if you look a little bit more in detail, you can see that these are quite large numbers, and it looks like it is a mixture of longs and shorts. It's a little bit difficult to see in hindsight, so I'm going to switch over to another template really quickly to see what happened there exactly. If those were actually longs or shorts opening. So it essentially was a short squeeze with actual longs opening at the very top twice. So at this top, longs opening, here also longs opening. So you could say that essentially longs are being trapped over here. So that's good to know. So these are not only shorts being stopped out, they're also actual new longs opening with actually, wow, about 10 million here in this candle at the top, and a little bit less in the next candle. And you also saw some actual selling coming in. And ultimately we closed below this previous high, which makes it so that, let me see what is going on here. Essentially, basically getting back into the range. If you look at it, just to make it a little bit more easily readable, I'm putting it on the 1 minute chart. You could class this as a little range going on over here, right? So you could say that this was more or less of a range, so to speak. Oh. So basically what you did, you swing failed this high at the moment. You closed back in this particular range. And you lost this range. You backtested this range. And this is on the 1 minute, right? So but you did change market structure here, because here you have your literally your high, your low, your lower high, and here you have your lower low on the 1 minute chart. So that provides you with a potential scalp. And if you zoom out to a little bit of a larger time frame, then obviously we are also in a bigger range at the moment, which could be classed as something along the lines of this. Yeah, I think this looks okay at the moment. Yeah, this looks fine. I like this. So I guess you could say that we had a little deviation of the range. We got back into this range, and if we now would say lose this range, then you also have then you actually have a more or less of a change of market structure, and then you could say that the swing failure pattern that happened all the way over here on the weekly level on the 1 minute is playing out. You know, and let's assume you did take the trade based on what you saw over there, then essentially getting back below the weekly in this case, you know, is a more of a safer option. Stop loss here above the high. Then if you're scalping, then of course take profit here at the low of this particular range. But alternatively, it would have given you actually profit getting back into this range. Take profit here at the low of the range, and then if you break this range, you can hold the trade and see what you can basically get out of it, potentially trailing your stop loss down. So at the moment, I would say swing failure pattern in the making. At the moment, I would class it as a swing failure pattern that is now giving us a retracement. Is it giving us a total trend reversal? Well, that has yet remained to be seen. And I would say if you lose this range and then ultimately lose these particular lows, then I would say it's pretty likely that you're gonna see lower prices. To be fair, but that has not happened yet. Although I do see a double bottom over here, so yeah, that just looks really ripe for the taking. To be fair. And then, you know, alternatively, you have here a low again. So if you think about liquidity areas, this is a liquidity area again. So this is also potentially where you could see look for a swing failure pattern. And of course, this is simply a low. You can also back this up with other technical analysis, Fibonacci levels, horizontal resistance lines, whatever you have in your toolkit at your disposal. Use it and see if it lines up with this particular level, because it strengthens the case for a reaction to be given. This is simply a weekly, and this was also a high volume node, and we did test it once. We swing failure at that, and now it looks like the actual swing failure pattern is playing out. It's pretty brilliant, live on stream, guys. I'm happy about that. So that is really all I wanted to talk with you about. Let me see. We would now have some time to actually go over some questions. Oh wow! Look at that. There we go. Nice. Well, we got that one live on stream then. That's pretty cool. Getting really excited. So Any questions? Please send them in so that I can take a look at it. And oh, I see that I just got notified by Daniel that we got a swing failure pattern of the lows. Just covered that, and looks like it's pretty brilliant. So here we have now something else again. It looks like we, at the moment, we swing failure patterned this particular low. So let's take a look again. We have a drop in open interest, so obviously longs getting stopped out. Everybody getting really bullish here at the highs, expecting all-time highs break. Are there shorts opening? Not really. For that, I need to switch again to the other template so I can see more. Oh, wow. Yeah, so that's a lot of... What? What happened over here? People shorting over here. And by this little uptick, they got stopped out. That's crazy. That's really crazy. All right. Looks like we're in for some volatility then. Yeah. So if you guys have any questions, then please write them out and ask them. And I'll be really happy to answer them for you. Let me see in the chat if anything is going on. Trying to find... Oh, I have the chat literally in front of me. Let me see. I don't really see any questions coming in at the moment, so I will simply wait a second and I will keep on monitoring the price action at the moment for a little bit. It looks like currently we are swing failuring the lows, but the problem here that I see is I don't really see any buying imbalances coming in right as of yet. You know, it can still happen. So this is, for example, a good example where you do now have you know, you do have lots of selling imbalances at the moment. Ideally, I would love these to actually be new shorts opening, which is at the moment not really the case yet. So that actually makes me think we can drop a little bit more. What gives me more reasoning for that? Well, simply the fact that I don't really see any big buys coming in right now, right? So I do see potential of ingredient number 1, but at the moment I do not see anything of ingredient number 2 just yet. So that is why I would not necessarily trade this into a long right away. And yeah, quite a lot of volume coming in. Let's see how this progresses. I see some questions have come in. Let's go for it. There we go. Cryptosane and others. Which time frame should I look for? A valid swing failure pattern. Does the swing failure pattern work on all time frames? Yes, it absolutely does. We just had a 1 minute swing failure pattern, so it can literally happen on the 1 minute, even up to the weekly, so to speak. So all time frames matter. Yeah, this is actually a good question. So the way that you can see what time frame this was actually happening on, there's probably multiple ways of doing it. So this is the Bybit chart, and on BitMEX this was actually a swing failure pattern. It looks like this was a double top over here. But the way that let's assume that this was a swing failure pattern. So the way that you can do it is simply go to the 1 hour, right? Now I need to find it back. Yeah, that's obviously not really a swing failure pattern over here, right? But if you then, let's say, zoom out to the 15-minute time frame, you can probably see this double top over here. So on the 15-minute, you can actually see it, right? So in this case, it would be classed as a 15-minute swing failure pattern. And then also on the 5 minutes. So I would then, in that case, I would pick the highest time frame, and that is the time frame that we actually had a swing failure pattern. So in this case, this was a 15-minute swing failure pattern. yeah, we it happened on the 1 minute chart, but now you could potentially class this as a 5 minute swing failure pattern, so to speak. So they happen on all time frames, but what's important is it's a little bit difficult to say, really. It really depends on what you're trading for, because if you're swing trading, then you're usually not really spending so much time on the 5 minute chart. So in that case, you can miss the swing failure pattern. So I find that a little bit difficult to answer like in a really exact way. Um, but for the confirmation of the swing failure pattern, um, I look at volume charts, for example, and the footprint charts, just as I did just now. And the footprint charts, I really, it's personal choice. I like to use them on the 5 minutes, and the volume chart varies. And currently, with the current market situations, I like to use the 15 million volume chart to look on. So I hope that answers your question. In a swing failure SFP trade setup, if we take profit 1 right at the range, what would be the optimal equity percent to take profit? Yeah, so that's a really good question. The thing is that swing failure patterns are, you trade those in the moment. So when you're talking about position sizing, I have like pretty much a set position size that I simply enter the trade with, because as you can see, the swing failure, this one happened literally on the 1 minute. I don't have time to take my notepad and write down how much risk I should take and what my position size would be. So in that time, I would have missed the trade. So what I do, I work out my position size beforehand, specifically for these kind of situations. And then if I look for a swing failure pattern, I literally already have my my order in the book, or not in the book, but I have it filled in the input field in the exchange that I'm trading on. And then when the entry trigger is given, and I do trade step 2. So I don't always wait for market structure confirmation. I never trade a swing failure pattern simply just off of step 1. Step 2 is the minimal requirement, and that typically gives me an initial entry, and then I add more as we actually start to break market structure. So in this case, that would be trading. I actually am in a short. I took it before the stream. Not from the swing failure pattern, but I took it off of simply because it's the last resistance, and I thought, why not? So so I took a short, and I'm still in it. And the way that I traded it is initial starting position, because after all, we are in an uptrend, we are reaching all-time highs. So it's a risky trade. It's a very risky trade, and I'm aware of that. So I'm not gonna go, let's say, all in on this particular trade. But at the very least, I have some skin in the game. And as we now maybe change market structure, I now have time to actually get a really nice average entry by, for example, compounding. So that's the way how I look at it currently. So to really answer your question, what's the optimal equity percent to take profit? I would say, typically it should be a 2-to-1 risk to reward ratio, and your first take profit, there's no harm in just taking profits very quickly, I would say. If you're early into this swing failure pattern, then your stop loss is so extremely close that ratio wise, it's a very, very nice trade already to begin with. Next question. In the trap traders example, they're at the lows. On the second move down, could you explain a little why less volume and negative delta is what we want to see there? Well, it signifies that that the selling pressure is clearly less strong than the previous attempt. So that shows weakness in the move. If you're looking at this as a strong directional move to the downside, you want to see strength in the move as you take each low, right? Because that gives more sentiment towards the downside. If you see increasing in volume and the delta is going to be higher, then I'm going to be a little bit more hesitant into actually trading this as a swing failure pattern, because then typically what I would expect is to drop a little bit lower or a lot lower. That really depends on the situation. So less volume already means that, you know, that the strength is getting out of this move. And then also, if you see less negative delta, it's essentially the same thing as volume. It's just basically selling drying up, um, which makes a really nice case to start looking for a long upon confirmation of these three ingredients. What tick size are you using in EXO to see swing failure pattern in real time? Good question. I don't really know. I have it on tick 10. So this is just my standard setting. I just put it on like this ages ago. And one thing I will say, if it's really difficult to read in the moment, for example, if there's a lot of things going on in here, I like to simplify my charts all the time. So what you can do then is, for example, go to the 15 or 30 minutes, right? If you really want to see what happened exactly at this high, and here I have it automatically set on tick 100, which basically groups this entire piece of price action together. And now I can clearly see like what happened really here at the high, how much sells, how much buys in total happened over there. So those are the two ways that I look at it. And yeah, 5 minutes doesn't make sense to have that on tick 100 because yeah, it basically merges all these price things together. So for me, it doesn't make sense to have it too high. So I like 10. Got some more questions. Let's see. I find it really cool that we actually got the swing failure pattern on the stream. That's pretty cool. All right. Open interest, new longs, new shorts are data based on market orders only. Yes. The only way that you cannot see limit orders. The only way that you can get a sense of limit orders is literally looking at CVD. If you see CVD is very simply a line, or I guess you could call it an indicator that shows buying or selling pressure. If the selling pressure is really high, but actually price is not taking out you know the low, then it's very clear that a lot of people are just markets selling. The pressure is really high, but there must then be someone or some couple of people holding price up. So that is, I would say, the only way that you can really see limit orders. Another way that you can potentially see it is looking at the order book, but that kind of goes beyond the scope of what this stream is covering tonight. How do you know the difference between a swing failure pattern and a flag or a pullback? I think, yeah, so I think you're referring it as a retracement or a reversal. At least that's how I read your question. You don't initially, and that's why you take profit. That's why you take profit aggressively at first. And then as you actually change the market structure, that is the moment when you can say, you know, this is going to be a reversal at the very least of the short term or the midterm trend. But initially, if you enter into a swing failure pattern, there's no way of telling if this is gonna be if this is gonna result in a you know, in just a little retracement into a higher low while maintaining market structure, or if this is gonna you know, have a larger effect. That's impossible to say as it's happening. Well, one thing I will add though, of course, if you see extremely high activity at these key levels, then the moment that you're, let's say you have, we would have had way more buys up there, then you know that also amplifies. It is likely to amplify the effect of the swing failure pattern, right? So the more volume there is at these highs, the larger the effect typically is. Doesn't have to be, but I think that's a good guideline. Um, does open interest influence the strength? And yes, so I literally just answered that. Yes, I think it does. It doesn't have to, but it, yeah, generally it does, because let's say you have 30 million longs opening at the high. then obviously once price returns to that level, they're gonna try to close out. So that that is also a way of how you can gauge how strong the resistance is. Yes. How would a whale go about setting up for a swing failure? Place a limit order ahead of time and then get the price to change with a big market order. Yes, it could be a way. I don't really want to go too much into detail on that because that's like very personal, I would say. But that is one way how you could do it. Yeah. So, for now, these are all the questions that I have received. Um, so just I would say I think that's we can now wrap it up then. We've talked about liquidity, why liquidity is useful, why people are looking for liquidity to fill their bigger orders. We've talked about how we can participate into the larger traders' actions, so to speak, and what are we looking for. We've gone over two different strategies. One, I would say, a more relaxed strategy that you can simply view on time frames, and that you can view on time frames and are more suitable, I would say, for swing traders, for example, or if you don't have knowledge about extra charts yet. If you're looking for more complexity and if you're really more of a price action trader, then we've covered the strategy that you can do on exo charts and what to look for. We've gone through plenty of examples. We even got ourselves a live example that's playing at the moment right out in front of our eyes, which is amazing in my opinion. And I see that two more questions have come in, so I will take those quickly and then I will wrap it up. And if you have, of course, any other questions, then I can answer those after the stream in the Discord as well. So two more questions left. Can you explain what you look for on the scalp template for a swing failure pattern? So yeah, that's not necessarily really tied into the swing failure pattern exactly. The problem that I have sometimes with these are footprint charts, and I use these to look at the exact orders that are coming in, for example, and I like to use these on time frames. Yeah, just personal preference, but sometimes because let's say this all happened fairly quickly. So, and I'm having this on 1 minute or 5 minute. This is a 5 minute candle, and I see that open interest dropped over here, like was here at the high. So that makes it sometimes, especially in hindsight, a little bit difficult to see exactly what has happened now over here as we went along. So that is when I like to switch over to any kind of volume chart to see actually what happened there exactly at the moment. And now it suddenly becomes much more clear that where in the other one, so here I see simply a drop in open interest, but here I have much more detailed information as to what happened prior to that, because what I can say now is as we dropped here in price, shorts were opening, and then we had a little reaction, and then yeah, I don't know, a really big short got liquidated over here, and that's what happened, and that's where the drop in open interest comes from. But prior to that, there were actually shorts opening. So I think that's what's important. That's what I look for, just to get a little bit more detail and as to what exactly happened at that time. Because once the candles are closed, it's really useful if you're looking this live in the moment, because then you can just literally see it going up and down. But now this candle has already closed, so it's a little bit difficult to really judge in detail what really happened over there. So that's the way how what I like. I like to just have additional information. Would you compound the swing failure pattern if we lose the range and retest the range bottom as resistance? Yes, I would. Yeah. Also, because I'm actually looking for a swing trade. I'm really busy lately, so I don't really have so much time to scalp. And that shows because I think I can share that with you guys. Yesterday I scalped a couple of really nice trades in the morning, And then simply because I was very busy, I tried to scalp in between, and that basically made me neglect the way that I traded. So I also made a couple of losses. So I've decided to now stick a little bit more to day trade slash swing trades, and I see this is a great opportunity. I'm now obviously in pretty good profits at the moment. I haven't taken profit yet. I will after the stream ends. And yeah, if we really start dropping down, I will probably look to compound it really into a swing trade. But as of now, it's still unconfirmed. So, but I'll keep you posted. So then all I have left to say is thank you very much for joining us tonight. I hope this was insightful for you. And if you have any other questions, then feel free to ask them in the chat all the time, as I'll be around. So thank you. Have a really great evening and goodbye. Cheers.